All right. Hello, everybody. Welcome back to another market close. It is Tuesday, April 16th, 3:46 p.m. Today's been a really interesting day in the markets, primarily because of the fact that Jay Powell spoke today. Some of you guys might have been with me a few hours ago while we were discussing and watching Jay Powell speak with one of the Canadian ministers of finance, and they were basically talking about the relationship between the Canadian and American economy. The reason why people like me, and I'm pretty sure people like everyone here in the chat, cared about Jay Powell today is because although he was speaking about Canada's economy, obviously he was going to mention some things about American inflation. And he said something. He said something that was not really what the markets wanted to hear, even though the markets knew he was probably going to say something like this. He said, and I quote, "The recent data has clearly not given us any indication or greater confidence, and instead indicates that it is likely it will take longer than expected to achieve that confidence for inflation going down to 2%. This is what Jay Powell said today. This is the headline of the day. We got to talk about Tesla. We got to talk about AMD. There's a lot of stuff to talk about. But that's what Jay Powell said. Now, when that happened, and I'm pretty sure a lot of people here on the channel with me felt it wasn't really that hawkish. It was kind of just like obvious. It's like, yeah, CPI sucked last week. We're at 3.5%. 10 years pushing 4.7. Like, obviously, it is not looking good in the context of how the bond market is reacting and how oil prices are reacting and how equities will do if that is the case, given in November we had these same conditions and equities were not at 500 on the S&P. But S&P rallied right there. You had a big, thick green candle right after the conference ended and Jay Powell was done speaking. Currently, right now, S&P 504, not that different from where we were right when we ended. It's a little red right now, but it's like it's barely red, right? 504.24. I'm surprised. I'm quite frankly flabbergasted. I am shocked. I put any synonym for the word surprised. I cannot believe that we're still at 504. I would think with those comments and the bond market pricing that in, and the equity markets basically realizing that rates cuts are not coming until September. I mean, if we get lucky, maybe July, most likely it's September. We're still green for the day or relatively flat. And so that to me was incredibly, I don't even want to say bullish. It's just kind of weird, exciting. I don't really know what the word is, but the fact that we're maintaining 504 in the S&P, the only logic I have to explain this, and then we'll get into some of these individual equities. Robinhood having a fantastic day, up almost 2% of the day. SoFi's up almost 2%. Pounds are recovering a little bit. It was at 21.20, now at 21.90. The only explanation I can give is that I believe the market is pricing in or getting ready to price in Q1 earnings. And Netflix is going to crush this week. ASML is going to crush. TSMC is going to crush. JP Morgan, Goldman Sachs, Bank of America, Morgan Stanley, all of these guys crushed. I think all of these financials prove to the market, wait a second, the banks are fine. Seems like financials are going to be okay. We know tech is going to crush. So if the only bear case is inflation, if we kind of believe inflation will get back down to normal by the end of July, should we really sell off the market right now? Now, granted, I don't know if the market's right about that. I personally, I'll say it now. I think the S&P should be below 500, given what the 10-year is signaling as well. Look at the 10-year. It's up. Bonds are being sold off right now, and the 10-year right here, 4.667. We should not have an equity market that's maintaining the level we're maintaining, given what Jay Powell said today and given this 10-year. It does not, legitimately make sense. What I'm trying to say is I think we're seeing a head fake right now in the context of sports, right? Where you're about to shoot, but you kind of put the ball up and you get your competitor to jump up. And then as soon as they move out the way, then you shoot. It kind of seems like we're seeing a head fake right now. It does not seem like the market's reacting in the correct way. Now, granted, markets are irrational. It is what it is, but very weird to see the market action right now. And you guys know I'm super bullish on this market. I mean, every day I pretty much dissect what I think the bear case is and why it's not that good of a bear case. What Jay Powell said today, I mean, if there was any day for the S&P to be down, it would be today after those comments. We had another Fed president that spoke an hour later after Jay Powell, basically said the same thing, nothing too different. So the fact that the S&P is up right now, it's incredible to see this happening. And maybe the market just has a lot more trust in Q1 earnings being stronger than what everyone else thinks. Barkin, the president Barkin of the Fed, he said CPI data has not been supportive of a soft landing. So he said the exact same thing Jay Powell said today, yet nothing has changed in the context of the market. Some stocks that hit a 52-week low today: Johnson & Johnson, GameStop, AMC, Rivian, Neo, Lucid, Baidu, Gilead, Charter, Liberty, Legend Biotech, Sirius XM. Buffett's been buying a lot of that one. We got to talk about that one later. SolarEdge, Teladoc, Ginkgo Bioworks, Bumble, Corsair, Asana. A bunch of stocks have hit a 52-week low today, but the broader market's continuing to still rally in the face of some of those equities starting to come down. So it's really interesting, dude. It's really, really interesting. Bamboozled. Yeah, there's all the, like, I really could not expect the markets to be up right now, but the markets are up, and it's going to be interesting over the next couple of days to see how this plays out, if this is a real head fake or if people are buying the dip. Caesar says, good afternoon. Caesar, good afternoon. Thank you all for being here today. Let's talk about Tesla, and then we'll talk a bit about Robinhood and Bitcoin and some of the price action we've seen today. So Tesla, not that bad. I mean, it's struggling today. It's down 3%, but I would think it would be down more given what we saw yesterday with that news. Tesla right here, 157, down 2.6% on the day. Not that crazy. We're seeing a green candle right here, bottomed at 153.75. Let me know if anyone bought the dip here today on Tesla. Overall, not going as bad as I think a lot of us thought it would be. Couple of pieces of news on Tesla. They have removed all inventory discounts for vehicle models in the United States. This is the first time since 2022 that Tesla had no inventory discounts in the US for Model 3, Model Y, Model S, and Model X. Some recent discounts had been as big as 10% off, so this is a big strategy change. What does that mean? It means maybe price cuts are off the table. They just did layoffs. Now, they're trying to potentially increase those margins. One of the ways to increase margins is you decrease costs and you raise prices. At least for Tesla, you don't decrease prices. So kind of a bullish thing to see that they've removed all inventory discounts for vehicle models in the United States. Another really interesting thing that happened with Tesla today that has to do with Elon Musk is a tweet he responded to. Public Display says live stream Tesla earnings. I will be live streaming that next week. I think on Wednesday, I'll be live streaming it after hours, and we'll discuss everything going on in the world of Tesla. Someone said humanoid robots will exceed the supply of iPhones in the next decade. Elon says, yeah. Interestingly enough, now look, like, will that actually happen in the next decade? I think that's bullshit. And you guys know, I like humanoid robots. I'm an investor in a company for humanoid robots. The idea that they will exceed the supply of iPhones in the next 10 years, I think that's bullshit. I do not think that's happening at all. However, Elon liking that tweet and responding to it is the first time we've heard of him talk about the bot in a very long time, even if it's just via a response on a tweet. So interestingly enough, Elon actually responding to that, maybe earnings are going to bring up a little bit more about the bot and some other things that the market's not necessarily pricing in when it comes to Tesla. Tesla right now, 157. NVIDIA up 1.8%. Wow. SMCI up 10%. The only catalyst, I think, for SMCI to be up 10% is that Loop Capital raised their price target to $1,500, which is, I mean, if you do the numbers, it's not that crazy of a price target, to be honest. It's actually kind of reasonable. But I didn't think that Loop Capital is not, Goldman Sachs or JP Morgan. I don't think they have that much sway over a price, but that's the only thing I can look at for why this thing is up 10%. Let me look it up right now and see if there's any other news I'm missing, but I'm pretty sure it's that upgrade. Yeah, pretty much every article I'm looking at right now, $1,500 price target. It's like 7 articles covering this price target upgrade. So I guess that price target upgrade from Loop seems pretty exciting for SMCI investors. And there you go, up 10% on SMCI. AMD is also up right now. Now, AMD, they announced like these new chips for computers. They're not, people are saying, are these like new NVIDIA competitor chips? Kind of, not really. They're like me and Jose will talk about it this week on our podcast, but it's like sort of competing, not really. It's more so in a different series of chips that NVIDIA doesn't necessarily compete with. It's up 2.2% of the day. They also got a price target upgrade to $225. So that price target upgrade, I also think, is what the market got excited about as AMD, got sold off a bit. I mean, AMD was $220 in mid-March, I think. And so it's sold off decently since then. And that's why we see it. Getting a price target upgrade today. On the SMCI price target upgrade, let me read the note that Loop Capital put out because I thought it was interesting what they said. Then we'll talk about Robinhood as well. So SMCI Loop Capital says, we're raising our price targets to $1,500 as we continue to gain confidence in both our net bullish Gen AI server industry posture, and SMCI is an increasing leader in the need for both complexity and scale. We believe valuation-wise, on a PE basis, SMCI will remain a conversation point and believe if our fundamental thesis has teeth a 20 to 30x PE is maintainable. The way you decrease that PE is you increase the growth. More specifically, now that SMCI is in the S&P 500, yeah, I forgot about that. They are in the S&P 500. We're having regular conversations with large long onlys, both holders and new to the name, expressing the view that 20x to 30x makes sense for a leader in a structural build-out dynamic such as Gen AI. They're talking about 20 to 30x on the PE. Our $1,500 price target is 25x the $60 EPS and $40 billion of revenue we believe SMCI can achieve in full year 2026. SMCI currently is doing 15 billion in revenue, if I'm not wrong. So they think that can CAGR over the next couple years at about 50% to be able to get to that 40 billion number by 2026, which is not bad. I mean, if you believe that can happen and the server space for GPUs is only increasing, which I mean, it is given GPUs are increasing. There you go. You get a $1,500 price target. It's so funny that like now SMCI above 900 is like no big deal, because I remember in January when SMCI was mooning, all of us were like, this thing's going to crash to 400. It's going to be the worst story ever. People are going to lose money. People did lose money on some 0-day expiration contracts, but no, it's maintained all of its momentum. And that $600 dip was really a good dip to buy for us. It doesn't look like it deserves to go down. Now, could they do a stock split and make the price a little bit more reasonable? Yeah, and then we could have different discussions, but the only reason the stock is high is because there's a short float, right? There's only 55 million shares, and I think 10% is still short. Let's check that. Is how much of SMCI is still short? And that's why it's staying above these levels. SMCI currently is, wow, 6% short. The shorts 2 weeks ago, so in the past 2 weeks, 23% of the shorts covered their shares. Only 3 million shares are sold short. So the shorts are afraid of SMCI as well. So it doesn't look like SMCI necessarily is going to be in as many problems as we thought it was going to be over the long term. Okay, so there you go. That is the upgrade, or that is the update on SMCI. Now, a real quick update on Robinhood, then we'll get to the market close. I talked about this when in the JPOW conference we had, but Robinhood got a price target from Goldman Sachs to $20, and that's why they're outperforming today. Bitcoin's down, CleanSpark's down, Coinbase is down, MicroStrategy's down, all the miners are down. For some reason, Robinhood is up. It's at 1730 right now. At one point, it was at 1755. I think that price target is saving it. I expect Robinhood to come back down to 1650. Honestly, I think the price target is good, and Goldman Sachs, like, it makes sense for them to upgrade the stock, and I'm happy they did. But I don't know if Robinhood survives without, with Bitcoin down 1% on the day. Like, if Bitcoin's down, Robinhood tends to be down. We still haven't necessarily gotten out of the grapple hold Bitcoin has. If we're starting to, that would be nice. That's not the worst thing in the world. Like, if we only get the upside of Bitcoin and not the downside, that would be amazing. I think that's a little too much to ask for right now. Maybe after Q and earnings, that's possible, but we'll see. Coinbase right here down about 2%. So Robinhood really performing nicely on the day. It was at 1693 for like a good couple of minutes, and then spiked a bit higher. We got the market close in about 40 seconds. Netflix here, 617. Enphase down 2% on the day. Apple right below 170. It was at 175 last week, got sold off. Those iPhone shipments came out 10% lower year over year. Street's kind of worried that no one's buying Apple products anymore. I'm saying that hyperbolically. Everyone's buying Apple products, but not at the rate they were buying it 3 years ago. The Vision Pro is not really selling that much. So that's why I think the street's a little worried about Apple. And then Google as well, I think was little red on the, yeah, it's down 0.16%, nothing too much. Google 156, maintaining those 150 levels as well in the context of Google. So overall, a really interesting day. If you're just joining, Jay Powell said some pretty hawkish stuff, but he didn't say it in a hawkish tone. And the market sold off on that, then rebounded. Right now, you're looking at an S&P that's red, but most people would tell you if they heard what Jay Powell said, S&P should be below 500 right now. Holding above 500 is pretty incredible to me. Tuesday, April 16th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, markets closed. We got a bunch of stuff to talk about, and we got a bunch of stuff to look at in terms of what's happening with the markets. But we do have a market that is officially closed. Let's take a look at some of these stocks and how they are doing. S&P 500 ends the day 503.46, only down 0.2% on the day. Pretty incredible to see the S&P not get hit as badly as I think most people thought it would get hit. Google 156 down about 0.21%. Coinbase down 2% at 218. Coinbase was 260 a couple weeks ago, or even last week. So right now at 218, nasty fall over the past 7 days. SMCI up 10.6%, 976. AMD up 1.96%, 163. Tesla 157, down 2.7%. Bank of America, good earnings, but profits and revenues were down year over year, even though they beat expectations. That's why they were down 3.5%. I don't expect them to be down for a long time. I think the market will eventually buy Bank of America up, but that one is down 3.5%. PayPal, it ended red, but it was green for the majority of the day, down 0.12%. Robinhood 1730 ended up green 0.7% of the day. Nvidia 1.64%. Palantir did a nice job holding the line at 21. I think the lowest it got to was like 21.30, and then it bounced all the way back up to 21.91. Right now at 21.88 to end the day. I mean, we're 12 cents below 22. Not that crazy. There was definitely enough demand and liquidity. 33 million shares were traded today for Palantir. Market cap right now 48 billion. CleanSpark down 1% of the day. QQQ actually up on the day, even if it's 0.01%. MicroStrategy down 6%. Why did MicroStrategy take a tumble? It is trading at a significant premium to Bitcoin, which means the upside is amazing. The downside is also as violent as the upside is. And so some of the other Bitcoin stocks, were down 2-3%. MicroStrategy down 6%, given Bitcoin fell a good 2% in the matter of basically 3 hours today. Rocket Lab ended up about 1% up. Donald J. Trump SPAC. Wow. I did not see this. It's down 14% today. The last time we looked at it, it was at $28. It was up in the pre-market. You guys remember? It was literally up in the pre-market. It was like $26. $22.84 right now. The reason it's down, I mean, the dilution news yesterday wasn't good. Also, Trump is planning a streaming network on Truth Social. It's like a pseudo Netflix Rumble competitor. Don't know how that's going to go, but this stock down 14% on the day. So someone sold some shares heavily. Goldman Sachs down about 1%. Enphase down about 1.78%. Apple again down. Let's look at the Mag 7. Meta. How's Meta doing? Meta $4.99. Microsoft $4.14. Microsoft the only one that's really green today. Amazon was down a little bit. Nvidia was green, but it's down right now after hours. And then Tesla here 157.11. That is down as well on the day. All right, not too crazy. Packback says my DJT puts are printing. I actually know a decent amount of people on Twitter that bought puts. And I didn't do it because, to be honest, with these things you never know, dude. Like, yes, was it obvious this thing was going to fall? Probably, but it's also like you just never know. But so the people who did buy puts, I mean, congrats. It was a good trade. And if you have good strikes on those puts, you are probably decently up on that. Right now. Katie says, what's everyone's portfolio looking like today? Down or up? Yeah, put in the chat if you're down or up. I was down a lot in the beginning of the day. We ended the portfolio down 1% on the day. We were up for the majority of the time while J. Powell was speaking because he was just pumping the markets. And then right at the end of the markets, we had a little bit of a collapse. So my portfolio is down about 1% on the day. I would imagine a lot of people are down 1 to 3 to 4% right now. It's definitely a red day. It's not like it's not a red day. It's just that S&P did not get it. If this S&P was below 500, all of us would probably be down, closer to 5, 6, 7% on the day. This thing's at 503. It's somehow holding up. And maintaining a little bit of momentum here. Down, UNH messed you up. Okay, UNH had good earnings, I think, right? UNH, what is it at? Yeah, it's up 5% of the day. UNH is United Health. They're one of the largest healthcare companies in the United States. Let's look at their numbers. We were supposed to do this on the market open, but we didn't get a chance. Let's take a look at these guys. We got some breaking news. Before we get to that. Canada is raising capital gain taxes on individuals and corporations. Canada is raising capital gains tax on individuals and corporations. Gergevin reporting that right now. He's actually from Canada, so likely is reporting it accurately. Okay, there you go. So if you're in Canada, better pay up. This is what you get for the maple syrup, huh? Let's see. Let's Google this. How much is this actually increasing? How much do you guys pay right now? What is who's in Canada who can say what is the capital gains tax? Oh, wow. Here it is. I got it. Individuals will continue to only pay tax on 50% of any capital gains up to $250,000 per year. The inclusion rate will also increase to 2/3 for all capital gains realized by corporations and trusts. Wow, so 66%? They're going to do 66% on capital gains from corporations? Really? The proportion of capital gains on which tax is paid for capital gains for individuals with more than $250,000 in a year will increase from one. Oh, shit. Holy crap. Wait, hold on. Let me read this again. The portion of capital gains on which tax is paid for capital gains for individuals with more than 250K, which means in the capital equity markets, if you make over 250,000, it will increase from 50% to 66%. This can't be real, dude. Whoa. I'm not reading that wrong, right? You guys are seeing it on the screen. Individuals will continue to only pay tax on 50% of any capital gains up to 2. So up to 250, if you make 249 in capital gains, half of that goes to Justin Trudeau. If you make 251,000, the 1,000 after the 250, $667 goes to Justin Trudeau. So if you know how to ball in the markets, then you're making 66%. Or am I wrong? How am I wrong on this? No, that is the portion that is taxed. No, they don't fix it. Wait, no, which part am I reading it wrong? It's prorated. No, that's my point. So after 250, whatever you make. After 250, whatever you make. Okay, so let me say if I'm saying this wrong. After 250, let's say you make $1,000. That's the 66%. Well, then why are they saying 2/3 if they're only saying individuals will continue to only pay tax on 50% of any capital gains up to 250 per year? How am I reading? The inclusion rate will also increase to 2/3 of capital gains realized by corporations and trusts. The new rules will apply to capital gains realized on or after June 24th. Oh, here's an example. Hold on. Here's an example. So a high income individual living in Ontario with a $400,000 salary also has a $300,000 gain from the secondary property. Under the current rules, they will pay income tax on 50%, which is $150,000. Okay. If they have the same gain in 2025, they will now pay tax on 158,000 of the gain. 50% times 250 equals 125 plus 2/3 of the 50. Yeah, that's so it's above that. It's about, you made 100K, you were only taxed on the first 50K. Dude, this whole thing is stupid. This is why the tax law needs to be flat, dude. This is the dumbest shit ever. This is so confusing. This is ridiculous. Okay, so in the same year, they will now pay tax on 158.33. So that extra 8,333 is 50% times 250 equals 125. Oh, okay. So it's up to 250. That's the difference. I was reading it as if you had legitimately 250 gains. Basically, your income is higher. That's correct. Basically, your income is higher. Okay, regardless, Canada, you guys got to pay more taxes. You guys got to pay some more fucking taxes. That's what's going on. Oh boy, dude. That's, and honestly, the United States, we might be coming next, dude. Fucking Elizabeth Warren has her way. We might be coming next. A couple of key things I want to show you guys. Then we'll talk a little bit more about what's going on with Tesla. Jamie Dimon sold 178,000 shares today of JPM stock. So here today, Jamie Dimon sold 178,000, $32 million yesterday night. He sold about of JPM stock. He sold 180 million worth this year. What's really interesting about this is that Jamie Dimon has not sold stock in 20 years. Today is the first day in a long time, today this is the first year in 20 years where he's actually selling more than what he got. So JP Morgan, Jamie Dimon now selling a bit of that. That's never the best sign when the CEO of a big company is selling, 100, that's almost, $250 million worth of stock. That's a decent amount. But that is something to look at for Jamie Dimon and what he's doing right now. So that's what we got on Jamie Dimon. Let's go back to the market and let's see what else we have going on. Canada says 98.9% of the population is not affected. Yeah, but the people that are the high earners, I would imagine, are the ones that are mainly affected right now. S&P 500 flat right now after hours, 503.46. SMCI 976 up 10.6%. Nvidia 874 up 1.64%. Robinhood down a little bit, 1728. UNH, let me pull up their numbers again. I wanted to pull them up and see how they're doing. UNH, United Healthcare, that was a big one today. So here is UNH's numbers. If anyone had this, let me know in the chat. This one was a really good one today, up 5% on earnings. Non-GAAP EPS 691. They beat by about 30 cents. Revenue 99.8 billion. They beat by about 500 million. Estimated was 99.3 billion. Full year guidance 27.5 versus 28. Non-GAAP EPS, what was expected was 27.7. Market liked it. They went up 5%. UNH, it's not like the sexiest stock, but it is a pretty damn big company. I think My Healthcare is from UNH. So I'm pretty like they insure a decent amount of Americans. Right now, the market cap on this company, yeah, $432 billion. It's good to see financials perform pretty well in terms of JP Morgan, Goldman Sachs, Bank of America, etc. And then UNH, they're up another 1.23% after hours, 474, up 5.24% of the day. Healthcare and financials doing well. We have retail and tech, and retail sales were up month over month in March by 0.7%. So I imagine Lowe's, AutoZone, Macy's, Home Depot, they're going to do good. And then if tech does good, we're going to have a decent Q1. And as long as inflation comes down, maybe we get a little bit more of the rally continuing into Q2. But right now, those companies have done well. The thing about Tesla that's happening a week from now, I think the market's not going to care if Tesla tanks the bed. Like at this point, the market doesn't give a shit if Tesla or Apple does well, which is really nice to see, right? The market just doesn't care anymore, which is what we want to see. We don't want to see the market care that much about Tesla or Apple. And I think if they crap on earnings, which they probably will crap on earnings, we're not going to see a ton of momentum to the downside for the broader market if Tesla and Apple don't do the best. So it's going to be interesting to see how that plays out. Here's HSBC basically saying we should still do a rate cut even though inflation is high. Here is their argument for why rate cuts should happen, even though Jay Powell said today rate cuts are probably not happening anytime soon. Here we go.
Does maintain his prediction of 3 cuts by year end, but says fewer cuts won't be a game changer to risk assets. Joining us today to discuss, HSBC Chief Multi-Asset Strategist Max Kettner. Max, always good to check in with you. You're not alone. I think Morgan Stanley still looking for 3. State Street, I think, is actually still looking for 3 plus a June cut. But then, you get these consumption figures, and maybe with a 3 handle for Q1, does a cut make sense in that environment?
Yeah, good morning, and thanks for having me. I think it still does make sense. I think what we're doing now is we're getting a bit too extreme, a little bit to the opposite side, what we've done at the start of the year. Remember, just 3.5 months ago, basically market pricing was for around 180 basis points of cuts, right? The only question was, are we going to get 5, 6, 7, 8 cuts, right, this year? Whereas now, now we're suddenly talking about super core inflation picking up, services inflation picking up, right? All these sorts of really worrisome things. But let's be honest. When we look at, for example, inflation data last week, most of the increase, most of the upside surprise in inflation last week has really been driven by things like vehicle insurance, by stuff that you can still argue has at least partially something to do with what's been happening during the pandemic, right? With the surge in used and new vehicle prices. So I would say, number one, it's perhaps cooked a little bit too hot right now, but I think people getting from one extreme a little bit too much to the other right now, number one. And number two, what that does set us up. Let's remember where we are right now. We've had yields, the 10-year yields going up almost 80 basis points since the low, right? Since 380. We have short-term inflation expectations that went up from below 2%, below target at the start of the year to almost 3% now, right? We've got obviously also longer-term central bank expectations now close to 4%. So it does set us up also for any kind of little bit of a dovish surprise, whether it's on inflation or price data or activity data, where both the rate side and also the equity market can play a bit of a relief rally.
So what he's saying there is that basically, it's actually a funny argument he's making, that inflation data has been so bad over the past 3 months that if we get any good data, there's only upside to go from here because inflation data has already been so bad. Now the opposite is if we get any bad inflation data, the downside is more than ready to take us back down because it's already been so bad. So it would be compounding the bad news. But his argument is the 10-year is already at 4.6. Basically, it's an argument of it can't get that much worse. If we're at 4.6 on the 10-year, are we really going to 5% in this economy where the market has an appetite to buy a lot of these tech stocks, et cetera, et cetera? Or if we get a little bit better inflation data, not as good as what we wanted, but better than expected over the past few months, the 10-year would immediately drop, and that would cause equities to go higher. I think that's the core argument he's making, which is not a horrible argument. It all depends on that inflation data actually being accurate. Okay, let's go back to that Canada example because I got to read this and I think it makes a lot more sense. Okay, so if you're just joining, Canada has raised their capital gains taxes, and this is kind of how I'm understanding it right here. So if you make $400,000 in Ontario and you have a $300,000 capital gain based on what whatever capital gain, real estate, stocks, whatever it may be. Under the current rules, you will pay 50% or 150,000 off of that 300,000, because that 300,000 is greater than 250. That's where you pay 50% in capital gains taxes. Now, let's say you have the same $300,000 gain in 2025 when this goes into effect. You will now pay taxes on $158,333 of that gain. So you have to pay taxes on $8,333 more dollars. How do you get to that number? You do 50% of 250 out of the original 300, and then you do 2/3 after the 250, which 300 minus 250, you have 50 left. 2/3 of 50 gives you the 33,000, which gets you the 158,333. So, I mean, there you go. You will be paying 2/3 more off of your taxes. It's just, it's not originally how I thought, where it's like literally 66%. Like, that's not exactly what's happening, but it's after the initial 150 or the initial 250 of whatever amount of gain you have, plus the 2/3 of that amount, which is the difference between 300 minus 250, in this case, 50,000 for this example. Because of their high income, putting them in the highest marginal tax rate, the change to capital gains taxation will cost them $4,461 more in combined federal provincial income taxes. So it's another $4,000. I mean, that's definitely annoying. I'm not saying that's not annoying, but you know, Canadians are nice people, right? So if Canadians are nice people, you guys should love to. You guys should love to pay the taxes. Matt says, I like how they gave an example, only 50,000 above 250. Yeah, like when this thing gets, if you're really balling in Canada in capital gains, and you have some good returns either in the real estate market or stock market, and your gains are much higher than 250, those numbers will look a bit higher. Only 0.13, only 0.13% of 1% of people will be affected. Yeah, I mean, it's going to be the top elite class of Canada that's going to be affected by this, not the average person. But still, I mean, this is, I mean, look, I don't want to talk bad on Canada, but this is the reason Shopify is like the only tech company that's out of Canada. It's like there's the incentives to create the next Google, Microsoft, Apple. It's not just Canada, it's Europe as well. Those incentives uniquely are in America because we don't tax the shit out of you. Now, you can say America doesn't have universal healthcare. You can say all the bad things about America as well. But it comes down to, do you want sort of the sort of communitarian philosophy around everyone gets the right to XYZ, like healthcare? Or do you want the individual and the sovereignty of the individual to allow them to build the next multi-billion-dollar enterprise? And Canada made their decision, you know, and so did Europe. And America's the last one kind of holding on right here. Tanner and Tevis deserve this for their SoFi recommendation. Oh my God, that's hilarious. Oh boy, Tanner, if you're killing it in the market, if you're still here, get ready to pay up, baby. You got to pay Trudeau some more money. You got to pay Trudeau some more money. Now, granted, if Canada has, which I don't know, a good tax loophole system, I don't know if Canada does, but if they do, then I guess you can do a bunch of write-offs and try to get out of it as much as you can. I actually don't know. I should speak to someone in Canada that actually has made money but not paid a tax. Everyone I speak to in Canada that has a lot of money, they pay a decent amount of taxes, dude. It's not like America where you speak to people and there's like 17 different loopholes. I mean, Trump is the biggest example. The dude hasn't paid taxes in years because like the tax laws are written differently in America. So it would be interesting to see ultimately how it plays out in the context of Canada. Okay, let's get an update from Pomp on what's going on with Bitcoin. He was on Fox Business today. Let's hear what thoughts on why Bitcoin didn't go up when Iran attacked Israel. Are you guys happy? I said Iran, not Iran. Here we go. Here's what Pomp has to say.
This is a great story, and I think something worth paying attention to. But the story actually starts with gold. So at the end of last week, gold started to hit an all-time high and was pushing up. And I actually wrote a letter on Friday to investors, and I said, hey, is gold actually signaling that a major geopolitical event could be occurring in the next few days? Mm-hmm. Saturday, we get the attack. And so who was buying gold? Was Iran buying gold? Was China buying gold? Why was gold going up a couple of days before? Is it a country who believed that there was going to be severe financial sanctions against their country, and so they wanted to protect their central bank assets? It's interesting. Then, of course, when the attacks actually occurred, Bitcoin did drop. But I think we can go back to 2020 and see why Bitcoin dropped over the weekend. In 2020, during COVID's kind of initial pandemic outbreak, all asset prices fell and correlations went to 1. So it didn't matter if you were in stocks, bonds, Bitcoin, or anything else. Everything dropped because investors were panicking. They had fear. And so naturally what they want is they want US dollars in that situation. And so thankfully the stock market was closed on Saturday and Bitcoin was really the only market that was trading.
That's right. Because
the
it
price
trades 24/7 for those.
Of course. So what was happening was people were scared, right? So what do? They sell liquid assets. They want to raise dollars in order to be able to have those dollars and figure out what's going to happen. Now, what I do think is important though, is that if Bitcoin leads on the way down, in that panic moment, it will also lead on the way up in the coming days and weeks after people, I think, kind of get used to, okay, well, what is the current situation? They evaluate it and they realize that the underlying fundamentals of these financial assets has not changed regardless of what's going on in the geopolitical kind of environment.
Let's talk about the halving event and tax season. What you have noticed is that in the couple of days before April 15th, which is today, folks, I hope you paid your taxes if you owed, that Bitcoin goes down because people are now selling it to raise cash to pay their taxes.
If you have a store of value and you think that it is going to continue to increase your purchasing power over time, you're not going to just put 1% of your assets in. Even though most people say, as a financial advisor, 1 to 3%, that's probably the right allocation for most people. What we notice in the Bitcoin community is people do more whether they should or they shouldn't. And so naturally, if they need cash to pay their taxes, they have to sell Bitcoin or other financial instruments. And so Bitcoin goes down leading into this. And so it actually muddies the water of the analysis over the weekend because you have the geopolitical event, but you also had tax selling as well. So it's not just one culprit. It was a culmination of different things.
Not entirely right. Earlier today, Hong Kong regulators approved Ether and Bitcoin ETFs. I thought China was sort of absolutely not. They banned Bitcoin miners who all had to rush to Kazakhstan and surrounding regions. Are they now giving a very silent nod of the head like, yes, it's okay?
One of the interesting things about monetary policy in the fiat world is that monetary policy is changed according to the world. So if the world is in panic, they will change the monetary policy. If the world has too much liquidity and too much FOMO, they would change the monetary policy. The monetary policy of Bitcoin never changes. So what that does is the world has to conform to Bitcoin. That's what you're seeing happen in China now, is they didn't like it because they thought it was a threat. Now they realize Bitcoin is not going to go away.
Yeah.
And so now they've got to come back around and figure out a way to get that into their hands of their citizens.
Really quick, last time you were on the show, and this was back in February, you said Bitcoin would hit 100,000 by 2025. You still with that?
Yeah, after I said that, people got really upset with me. They said I was sandbagging, that they thought it was going to go much higher, but I'll just stick with 100,000 by 2025.
Okay, good to see you.
Thank you so much for having me.
Anthony.
It's an interesting argument. I still am curious why, if the Bitcoin bull case is that it is a flight to safety, people raised dollars when there was a geopolitical crisis versus raising Bitcoin. It's funny. The central banks have been buying gold like crazy. A report came out today. I forgot which bank said this, but some bank said that they expect gold to be $3,000 by the end of the year. Gold currently, I think, is above 2,400 right now. Gold, yeah, 2,405. Gold is up 1% today. It's just incredible, dude. Absolutely incredible. But so I do think his answer to why Bitcoin didn't go up when the geopolitical stuff happened over the weekend was that people were raising dollars and that Bitcoin will eventually lead as people realize as the situation calms down. That's not an answer, in my opinion, because the crux of the problem is when the crisis is happening, why isn't Bitcoin going higher? When Israel is being attacked, why aren't people raising Bitcoin versus why are they going into dollars, right? So I don't think Pomp answered that. And I think there is no answer to that. The simple answer is that no one wants Bitcoin when there's a geopolitical crisis. Unfortunately, that's the truth. I mean, I have not seen this thing perform as like the hedge against the World War III that people think it is. It's more like a growth stock. A growth stock falls when there's geopolitical instability, like the NASDAQ. It performs like the NASDAQ. I think there was a chart someone did on Bitcoin and the QQQ. They almost are identical if you look at their performance over the past 3 years. And so I don't think this is, if a world war breaks out, Bitcoin is, I don't think that's going to be the thing that survives. I think gold will probably go higher, but not Bitcoin. Now, gold's not going to explode, 100% or something. Maybe it could, but I think Bitcoin needs some world peace for this thing to still continue to go a little bit higher. It's still considered a risk asset. Exactly. It's still considered a risk asset. And maybe in the future when it normalizes, when it's like, $200,000 a coin and it's like more stable and there's less volatility, it won't just be like a quote unquote risk asset. Gold, obviously with a $10 trillion market cap, Bitcoin with, close to a 1 trillion. There is a difference there, but currently it's definitely seen as a risk asset, not something to buy up when things go bad. I mean, you got to just think of the basic psychology. Would you really buy Bitcoin, one of the most volatile things on the planet, when shit hits the fan? I don't know, dude. I don't know if most people would be excited to get some more Bitcoin when things really get bad. I think people will be more scared, if anything. And so we'll see how this plays out. Let's get an update here as well. We're speaking of gold. I want to know, what is the relationship between gold and rate cuts, and why is gold going up so much? So let's get a little update there, and then we'll talk some more about what's going on with Tesla today.
So, I mean, look at these yields. It's got to have an impact on the equities market, right?
Well, you'd think from a multiple perspective for sure. Going into this recent rate move, the S&P 500 on a trailing basis got up to almost 25, 26 times earnings, and forward about 21. That's rather rich for the rise in interest rates. And its economic impact, its earnings impact, depends on what side of the fence you're on. Are you a borrower? Do you need to refi? Are you going to looking to buy a house? Are you trying to finance a factory? Or on the other side, are you collecting nice interest income as a saver? Are you a boomer that wants to go on cruises? Well, you seem to be doing just fine.
Yeah, I mean, Polonius's advice, neither a borrower or nor a lender be. The lender part's looking pretty good right now. Jeff, what moves are you making in this environment, given not only do rates not seem to be coming down anytime soon, but yields getting a little spike?
So, we're still in, John, kind of hold your ground mode. And there's no specific theme that we see out there. What we do like is, having active strategies that we manage. There really is correlations that are coming down. And you can even see that within the Magnificent Seven. They're moving in different kind of patterns. And that says that there's opportunity, and it's really based upon the fundamentals, the valuation, and the technical elements of these stocks. So we're maintaining a blend between growth and value. We find plenty of attractive opportunities within technology outside of the Magnificent Seven. And we really like within capital spending, the industrials look good as we re-onshore. The economy is holding up nicely. There's still opportunities within consumer.
What would be really funny to me is if financials actually outperform the Mag 7 over the coming months. I don't think that would happen, but if that were to happen, that would be just absurd to me. If financials, if tech has so much built into it that the market decides to pile into financials, or as he's saying, industrials, or even gold in that respect, versus some of the other larger tech stocks that I think most people think can go a bit higher. Tom Brady right here says DXYZ Insider sold 4.93 million. Okay, so DXYZ, I was doing some more research on it today. It is a closed-end managed fund, which is why you could not buy more of it today. I'm curious if people have it on other brokers, but on Robinhood, you're not allowed to buy anymore because based on the bylaws of this ETF, there was a certain period by which you were allowed to buy, and now you can only sell. DXYZ Insider selling is very weird. Considering, I mean, that's just weird, dude, to see if they're selling that much right now. That is a bit weird. I mean, the fund just went live like a month ago, March 6th. So if they're selling, I mean, it wouldn't make the most sense to me, but I mean, it makes sense because the thing is pumped so much, but it definitely would be a little bit of a red flag to some of these ETF, to some of the rules of the ETF as well. Okay, cool. Let's get into a couple of these things as well. John says people still need their fiat. Bitcoin went down because the risk was high. People wanted to take risk off the table. Yeah, I agree. It's just, again, it hurts the narrative that Bitcoin is a hedge against some of the bad things that are happening if people want to keep their risk off in those times versus fly to something that's quote unquote safe. Bitcoin just not being safe, which is okay. I mean, it is what it is, right? At this stage of its life, it's not conceived like that. But that is one of the reasons that it was down earlier today. Okay, let me show you guys a couple of things here that I had pulled up that I want to show. Okay, let's do these few things. So I want to cover Apple real quick, and then we'll go a little bit more to Tesla. So big Apple news today, which was really interesting. I don't think there's a reason why the stock is down, but it's one of the things the market's trying to understand more about Apple. Apple will now let users in the EU download apps through websites, not just the App Store. We saw the EU is suing Google, Apple, and Meta, and they started suing them about a month ago. Early March, they decided to start targeting these guys. Apple is opening up web distribution for iOS apps targeting users in the European Union starting on Tuesday. Developers who opt in and who meet Apple's criteria, including app notarization requirements, will be able to offer iPhone apps for direct download to EU users from their own websites, which means you don't have to go through the App Store, which is, I mean, it's really good for developers in the ecosystem without being in the wall that Apple's created. Apple's walled garden stance has enabled it to funnel essentially all iOS developer revenue through its own App Store in the past. Apple takes the 30% cut. But in the EU, that mode is being dismantled as a result of new regulations that apply to the App Store, in which the iPhone maker has been expected to comply with since early last month. I don't think that's a reason for why the stock was down today. I think more so the stock is down because of those iPhone sales that were just not good year over year. But that is one of the things to think about in terms of people saying Apple is, this monopoly that can't be shaken up. The EU is basically calling Apple's bluff, and they're saying, no, you guys are definitely going to play the right way. The EU regulation sets a set of obligations on in-scope tech giants that lawmakers hope will help level the competitive playing field for platform as business users, as well as protecting consumers from big tech throwing its weight around. This is one of those things I actually think is good for consumers. A lot of time, the EU or like the FTC in the United States, they try to do something in the name of consumers, but it's not really helping consumers. It's anti-consumer. This is one of those things. Being able to download an app without having to literally go through iOS is probably very good for consumers. The question is just how many people are ultimately going to be able to adopt that. So that's what we got in the context of Apple, and that's one of the updates that we have there. Okay. Steady Oxen says, I've been converting 10% of my cash into euros starting from 2022. Wow. Interesting. Yeah. I mean, I think there's definitely an argument to be made around some of the foreign currency exchanges that are happening right now, but the EU they are absolutely holding the line when it comes to Apple and not letting them get away with some of the stuff that they've been at least trying to get away with over the past decade at this point. I mean, Apple has figured out a way to get through pretty much everything here. Okay, let's pull this up right now and keep going from here. Lee Allison says the U.S. should call those EU regulations just what they are, trade war. Yeah, see, the thing about the U.S. is I think the U.S. wants to do what the EU is doing to Apple, but the U.S. doesn't have the guts to do it, or the U.S. has tried in the past and not really been that successful. So I don't think the U.S. would do that, but that's probably something that the U.S. would want to do. Okay, two things I wanted to show you guys on Tesla. So we got Gordon Johnson's price target on Tesla, which is pretty hilarious right here. He has a sell rating on Tesla, and he has lowered the price target from 23.53 to 22.86. This is that would put Tesla at a market cap of, I think, 60 billion, if that, around that range. Probably not going to happen. If that does happen, that would be we would be living legitimately in the simulation, in the Matrix. If that's happening, I don't think that's happening, but he has lowered his price target there, and so I guess we'll see if that happens. I don't think that's going to happen. And then here's the other thing I wanted to show right here. Tesla has removed all inventory discounts for all vehicle models in the US. We talked about that a little bit earlier above. This is the first time since 2022 that the Model 3, Model Y, Model S, and Model X don't have discounts. Again, they just did layoffs yesterday, cutting costs. Potentially now they're able to raise the margin on these cars where they have less workers to be able to pay for and less discounts on the cars themselves after the tax credits, of course, which is a really good thing in the context of Tesla's margins. And that's really important as well. Keg says, how does that guy have a job? He has clients. If you have clients, he was actually on a podcast once where he admitted, look, my clients don't like Tesla, and they said they would leave me if I was bullish on Tesla. So in the context of, Gordon Johnson, at the end of the day, you have to appease your clients. And if your clients are, telling you to think in a certain way and you don't think in that way, I mean, you could definitely see a bit of, you could definitely see your business lose overnight, right? And so he's admitted it. And as a result, he's, not like Tesla because of that. But now it's kind of become a personality. And so the reason he's in business is because he has people who pay him to stay in business. Let's get an update on earnings growth as we get into Q1 earnings, and then we'll keep going from there.
Right, you've been laying out your case for higher margins, higher stocks. Things look pretty good. Are you rethinking that now?
No, not
Higher
really. I
rates
mean,
don't do that for you?
I think when you're in this band, good news is good and bad is bad. If it gets too hot, the economy, then I could see us getting back to that too good, it's running too hot. They're going to cut. They're going to suspend cutting, maybe even hike. And you got the last 48 hours, you got a little bit of that, but I think it's fits and starts. It's not, the conclusion isn't in. I think it's mixed. Like the housing data was light, retail sales was strong. It's mixed. It's like the weather. It's 80, and then it's going to be 50. I don't see it as like clear.
That's annoying, right?
Clear, yeah.
Just make up your mind.
Make up your mind. So I think that we're getting that sort of inconsistent data right now in the economy. I don't think it's enough to make them start hiking rates. I think it's just delaying. Remember, what were these guys at 7 cuts at the beginning of the year, which we all thought was a little bit, equity guys thought was kind of ridiculous. So look, maybe we're in that band where to the upper end. If we get a run of hot, the people will freak out. But right now, I think the economy's still okay.
I feel like the Fed isn't changing like the weather, though. It's like cloudy with a side of higher for longer. Now we're trying to figure out what that's going to mean for stocks.
Which I'm good with. I think earnings so far, we have, 200 companies reporting in the next 10 earnings sessions in the S&P 500. There's a lot in front of us. We got the financials mostly behind us, and we got the big next couple of weeks. But I haven't seen what I would call a bellwether tell me demand's bad or, the outlook is being reduced materially, a big company. So we'll see if we get that. But so far, I think earnings season's been okay.
We were due anyway for some kind of a correction.
You don't get top left, bottom left, top right, every.
And I agree with that. We all knew we were due for a little bit of a correction. And if the worst is 10% and then we continue to just move on with the story, it's not the worst thing in the world. While we're down, inflation has the time to come down. Maybe it takes 2-3 months, 4 months, 5 months max. We'll still be at a decent spot, I think, by September, October for that rate cut, and for the market to hopefully do well after we've had 2 earnings cycles since the beginning of the year.
It's not a guy giving right that every day. So, yeah, you can get little retrenchments. People worry about maybe a little bit less accommodation. I still think the dream of accommodation is going to be better than reality. As long as the economy is okay and earnings are okay and margins are going up, stocks are good. The thing I watch every day is financial conditions. And if we start seeing them really tighten, then I think you're going to get a bigger, shift more toward, higher quality free cash flow.
Can't they tighten with a stock market correction of magnitude if rates continue to back up? It's not just a tightening of
spreads
credit.
Spreads need to widen. The whole kind of complex needs to get more risk off.
What about multiples? Do they get harder to justify in a higher for longer world or not?
We did a whole bunch of work on the relationship between multiples and margins last week, because there's a lot of old school folks who would just say, look, like the market's expensive. That's all I need to know. Eventually, we're going to mean revert down. And I think the problem with that is if you use history for the S&P, you're not really accounting for the fact that there's so many businesses. I think 36% of the S&P 500 market cap now is 60% gross margin or higher. It was like 15% 25 years ago. There's just less manufacturing, more software, more services and higher margin businesses, and higher margin businesses, sort of asymmetrically get higher multiples. So I think you could be oscillating around this level, not back to 15 to 17 times that I think a lot of old school people have as the sort of anchor in their head.
Yeah, but I still think, and if I recall correctly, I remember, Buffett on our air, not that long ago, handful of years, justifying, elevated multiples based on how low interest rates were. So how can multiples be justified at high levels with low rates, and then now we're justifying the same multiple at much higher rates than where we were?
It's a good question, dude. His argument is basically, how do we continue to keep multiples this high if rates aren't coming down when the opposite was happening just a few years ago?
Ex post, I don't think you should have had as high multiples with low rates. I think the truth is extreme yields are probably because the world's a little riskier, and those should be lower multiple environments. And now we're kind of in a more healthy, normal 10-year band that we would have learned in school is sort of, probably a higher multiple, more normal situation. I think it was just all the fiscal stimulus on top of the monetary policy that sort of confused people when rates were low. I think this is a more normal, healthy 10-year yield range to be in. And I think multiples can trade above 20 times as long as I dream margins are growing and earnings can grow next year over this year. Okay.
It's really interesting, dude. It's really, really interesting. His argument is basically we can handle a 10-year that's at right now. Where do we end the day on the 10-year? 4.7 basically on the 10-year. Again, the conundrum here is that how do we have 4.66 on the 10-year if the equity markets are not responding to the inverse of that? And the guy's argument, which is not the worst argument, is that the market can handle a 4.5 to 5% 10-year and still keep multiples high as long as margins are increasing and as long as earnings are increasing. This is why the catalyst of AI is something we talk about so much and why it's so important. If we did not have AI, this thing wouldn't make any sense. This thing would not make any sense. As Alex says in the chat, earnings. That is the fundamental catalyst for why this market is not collapsing yet. The perception of earnings continuing to give strong growth, which is increased operating margins. We saw that with Palantir, right? Their adjusted operating margin went up 5% quarter over quarter. Like, that's not supposed to happen, right? Like, but AI and their gross margins, that is what's allowing them to be able to get to be that efficient. If that could scale to companies across the entire sector, not just in the tech world, but industrials, retail, etc., that is a good thing. And then if revenue goes up and costs go down, that is also a good thing, which means we can justify high tenure with decent multiples on the broader markets. So I don't believe that we can definitely sustain that yet. If the 10-year keeps rising, I think equities are taking a tumble. Equities are going below 500 on the S&P. I mean, we're barely staying above it right now. So I don't necessarily believe what he's saying is to be true, but I do think it is possible. The problem is if inflation doesn't come down, then you just have too many bad things going on to try to get to that Goldilocks zone that he's talking about right now. Savici says, but even with earnings, algos rule everything, and now add AI and almost zero latency connections. That's true. Algos control everything, but if earnings are good, the algos will also buy stocks, right? Like if Meta comes out and they grow, I think the market's expecting like 23% year-over-year growth. If Meta says we grew 27%, right? Some ridiculous number. I don't know how much that would probably put like 29 billion of revenue this quarter. The algorithms are going to take in that information and just buy up the stock. Now, if Meta goes to the downside, it's because the algorithms realize that the earnings are just not that good. So even though the algorithms, specifically on earnings, control the high frequency trading algorithms, a lot of these tech stocks, if the numbers are good, they're going to buy up. They're going to buy up these stocks, which is the good part. Lee Allison says productivity boom is incoming. That's the other really thing that matters when it comes to AI. We showed that chart from Bank of America 2 weeks ago on the channel where productivity is at the highest level it's been since 2007, which is a good thing. Because in 2007, shit hit the fan. In 2024, everyone wants shit to hit the fan. Shit already hit the fan in 2022. And we got two things from shit hitting the fan. Inflation at 10%, but also the greatest tech revolution we've seen since the internet, which is AI. And if we can reconcile both of those things, productivity is definitely going to allow us to deal with some of the pain that we have in the macro, which is specifically the 10-year right now. Or Palantir adds 200 new commercial clients. That's true. If Palantir can add 200 commercial clients next quarter, oh boy, we're going to the freaking moon. I think Palantir at 30 after this earnings, or like close to 30, 27, 28 is not insane. They just got to crush on that customer count number. And if they do, it's going to be fun, dude. It's going to be super, super, super fun. But we got to see. We got to see how that plays out. Now, one thing to remember as well, Israel has a little update on Israel. And then I'm going to show you guys one more thing, and then I'll get you guys out of here. Israel has officially announced that they are attacking Iran. So they came out with this a little bit earlier today, but they're going to quote unquote be smart about it. Officials say they're going to be smart about it. So reading a little bit from this, the Israeli military said Iran would not get off scot-free following its unprecedented missile and drone attack early Sunday as the country's leaders continue to mull how to balance a forceful response with calls by the United States. We cannot stand still from this kind of aggression, the IDF said. Iran will not get off scot-free. It was the latest threat from military officials after IDF chief said that on Monday night there will be a response to the approximately 350 drones and missiles launched at Israel late Saturday and early Sunday. Israel's high-level war cabinet was set to meet on Tuesday for the third time in 3 days to decide on the response to Iran's first-ever direct attack, which left one person with serious injuries and caused only minor damage to a military base. So the Times of Israel reporting one person had some serious injuries. I think it was a 7-year-old girl, if I'm not wrong, and minor damage on their military base. The U.S. and other allies have urged restraint amid fears that an Israeli reprisal could fragment the U.S.-led coalition that would take down Iran's aerial attack. Despite worries of a larger conflagration breaking out, hardliners say Israel must mount a response to restore deterrence. So the people who are on the side of Israel attacking basically say, hey, you've got to punch back so they know not to punch you again. And then the Biden administration is more along the lines of, well, you have the consulate thing that happened in Syria. They attacked back. Now just let it go and let's move on from here. Israel basically gave the middle finger to Biden. They're saying, no, we're definitely striking back. Over the next I would imagine 48 to 72 hours. The question is, how bad is that attack going to be? I think Israel's not going to try to go for civilians. I think they're just basic military attack. And the question is, how bad does Iran perceive that military attack? How many people in Iran end up getting hurt, if there's casualties or anything like that? And then what happens from there? The worst part about all of this is, outside of the conflict itself, in the context of inflation, oil will go up if this happens. And that's going to be the sad part to see for inflation hopefully coming down, which it's not going to come down if oil goes up because of this. And so we will see. Now, America said we're not supporting Israel. Biden has already said, hey, we're not going to support you if you attack again. So if Netanyahu does this, he has to do it with the understanding that the Biden administration is just not, going to be on his side doing this. We're on their side in general, but in terms of this attack, Biden has said he will not support Israel actually going to do this. Okay. Last thing I want to show you guys, Mayor made a comment right here in the chat. So thank you for this comment, Mayor. I was going to show you guys right here at the end. So remember I said I was going to start paper trading with 500K? I started that journey today, and I'm documenting it here on Twitter. So I'm going to put the tweet in the chat. I will review this every single day as I make a update to the trades. You can bookmark this. So you can press this bookmark button right here, and you can always keep it in your collection so you don't have to worry about finding it. So I said I am paper trading 500,000 of selling options and documenting everything under this thread. The rules, 500,000 to work with. We're only selling CSPs and covered calls, cash secured puts and covered calls. We're not doing any spreads. And we're aiming for 1% a month in returns. So 12% a year. Now you might be saying, hey, Amit, 12% a year is not that great of a return. Why are you going through all this trouble to get to 12%? I do think one day I can get more than 12%, but I think right now we have to be super conservative and see if we can at least do it to the point where we can do 12%. The S&P on average is 8 to 10%. So we are beating the S&P. Obviously, over the past couple of years, S&P has done better. But right now, that is what we're going for. And, 1%, 12% on 500 grand is 60 grand, right? So it's a decent amount of money we're making because we're playing with a lot of money. But those are the rules for what we're doing here. So the first move we did today, this is the move we'd made on this paper trading account. We sold $15 strike May 10th cash secured puts on Robinhood. 20 contracts. We received $1,100 in premium, and we collateralized $30,000. Remember, cash secured put, you have to put up the value of the contract, which in this case is $1,500, 15 times 100 shares. We did 20 contracts, 1,500 times 20, you get 30,000. And that percent return over 24 days, because the contract expires on May 10th, which is 2 days after Robinhood's earnings, is 3.6%. So basically 1% a week is what the return is looking like. The logic, I think, is pretty simple for those that follow Robinhood. I think Robinhood as well, after May 8th earnings, wouldn't be insane to sell the $17 put, but I want to be more conservative here. I think 15 would be much harder to get to, even with the bad macro. So let's say Robinhood crushes on their earnings and the macro sucks. I still think getting down to 15 is just not going to be easy. So we haven't touched 15 since late February. If I do get to 15, I would take ownership of 2,000 shares gladly. I wouldn't be afraid to buy those at 15. And the adjusted cost basis, given the premium we get, the 1,100, 30,000 minus 1,100 divided by 2,000 would be $14.45. So that's the first trade. That's the first trade we made today. And I will keep everyone updated on this, how this goes. We have $470,000 left in cash. I know some people are saying you don't really feel it if it's not your money. I get it, but I don't have 500K to legitimately play with. So we're going to do it on paper, and we're going to hopefully try to manage the emotions and manage the risk as if this was my money. You can't do it perfectly because I'm not really playing with that money, but still that's why I'm trying to be conservative as well, right? I could have sold the $17 put and got a much better return, but if I had really had that money, I would not, sell a $17 put because Robinhood's at $17 right now. So as bullish as I am selling an at the money put, what if I'm wrong? So I think you have to factor that in when you're playing with the real money. Are you going to do one stock at a time? No. It's just based on the premiums every single day. Like today was a red day, so today's the day to sell. Tomorrow's a green day. We might not make any trades, right? Because if it's a green day, there's no point of selling puts. But over the next couple of days, if things get really red, then we will keep selling some more puts and do that as well. Okay. Crowd Control says, word of the day, reconnaissance. Did I say it right? I don't know why I always say that word wrong. Hold on. Let's see how Google says this. Reconnaissance. How do you say this word? Hold on. I said reconnaissance. How do you actually say it? The way you say it is
reconnaissance.
Oh, I wasn't wrong here. Huh. Not too bad. I got that one right. Reconnaissance.
Reconnaissance.
I know you guys are saying this because I messed up yesterday in Daily Palantir and I couldn't say this word. It was basically like the market open in Daily Palantir. It came up on the PR and I was just like, reconnaissance, and I just like moved on from there. You said it wrong in your last video. Yeah, I know. I said it wrong in my last video. I don't know what it is, dude, about these words. Like, I literally speak for a living. I was a fucking national debater, number 7 in the country, number 3 in Europe. All these fucking trophies in the back is because of how I know how to speak. And then these basic words, I just can't say them. I don't know what it is. It is what it is. It's just, it's how it ends up turning out. But we'll get better. We will. It's like kindergarten. We'll get better at speaking every single day. Can you talk on SoFi and its earnings? I'll talk more about it tomorrow, but I think SoFi is going to be fine. I think they're going to crush. I think $10 after earnings is not crazy. I'm not expecting that. $8 would be amazing, but I think $10 is possible. These new partnerships they're coming out with are great. The NAR partnership, the Gulf partnership is great. And then the NBA video they put out today, also phenomenal. That NBA commercial was great. Like, I really loved their NBA commercial today. If I wasn't a SoFi customer, I think I would definitely like Google what is SoFi, given they're the official bank of the NBA. And one thing I realized today, the official bank of the NBA probably is not going bankrupt. If it does, the NBA looks really bad. So I'm pretty sure the NBA due diligence team did a shit ton of work before they agreed to let SoFi become the official bank of the NBA, which gives me more confidence that SoFi is going to be fine. The market, the market's just waiting to see a little bit more growth. And I think SoFi should be good to go. June says you should make the word of the day relearning English instead. Okay. Well, all right. So let's end the market close on a burn by June. Thank you, June, for that. I appreciate it. All right, that's it for me. We'll be back with, I don't think we're going to have a Daily Palantir episode today, actually. So we're probably going to have a Daily Palantir episode tomorrow. So I'll see you guys there tomorrow. And then we'll have market open tomorrow as well. And keep going from there. And again, if you guys want to follow this cash secured put journey on Twitter, you can follow it right here in the chat. If you're not on Twitter, make a Twitter and check it out. You can just follow a bunch of Palantir Twitter people like me and keep updated with that as well. All right. It's a beautiful day again in New Jersey. Thank you, global warming. I'm going out to the gym, second day in a row this week. Got to work out, keep the momentum going, and keep going from there. Thank you, everybody. I'll see you guys tomorrow. Market open, 8:45 a.m. Have a good one. Good night, everybody.